This weekend sees a snap election that takes place in Japan, and whilst many think it probably doesn't have anything to do with their local markets, global markets will be certainly taking a look, given the implications for debt sustainability, for the potential blowing up of the carry trade between the US dollar and the Japanese yen, what the implications could be for global markets as a result. And of course, also local markets. Will the Nikkei 225 continue to push higher, or is this going to undermine it if we see the likes of dollar yen impacted severely? So plenty to play for and potential volatility ahead as we open up on Monday following this election. So first and foremost, this is the projection for where things are going to stand. You can see the LDP party. It's not a question of whether they win or not. It's just the degree to which they do it. It's essentially a one-party country. And the problem is that more recently, that party has been losing some of their support, in no small part due to the inflation problems that have continue to grow over time. And certainly if you look at the recent results, you can see pre-election strength level coming in below that majority line. Are we going to see the majority gained in the lower house? That means that Takaichi can essentially embark upon an expansive fiscal policy. Expansive fiscal policy, good for the Japanese economy, not so good for a government or a treasury that is running a debt to GDP ratio of over 230%, the highest of any developed nation in the world, a huge bond market that certainly everyone's going to be looking out for, because we've seen yields continue to go up and up and up, and that has caused a problem. And certainly if we do see them pushing forward with a whole raft of spending packages or tax cuts, that means a higher degree of debt by and large, a perception of instability, but then offset against a perception of higher growth, perhaps. So you can see here in terms of approval rating levels, you can see that her predecessor, who was a lot more conservative on the fiscal side, he wanted to shore up the budget because of the debt implications that they have in the country. Well, he certainly wasn't particularly popular because of that. Now, Takaichi, on the other hand, has flipped the switch. So gained the approval levels that should hopefully mean that she has a strong showing when it comes to this snap election. But it's on a very different ticket. And this really highlights a theme that we have been seeing of late, which is essentially debt is a problem, the continued growth of debt, and someone needs to address it. However, whenever someone comes into power, we've seen this in France as well, someone comes into power and starts to say that they're going to cut spending or they're going to raise taxes, it's not popular and they don't last very long. Soon enough, they get replaced. They can't push their budget through. And so you end up with snap elections. And then someone comes in promising the world, yep, great, but it's somewhat short-sighted. Now, the initial reaction that we saw since Takaichi came into power was essentially, as you can see here, weakness in terms of the Japanese yen, strength in terms of the Nikkei 225 and Japanese stocks, and then downside in terms of bonds, upside in terms of bond yields. Now, this is a recent article coming into this, and you can see here hedge funds have been reviving yen weakness trades ahead of the Japanese vote. Now, what we have seen recently is intervention to try and drive the likes of dollar yen lower, i.e. the Japanese yen higher. But the thing about it is, if you look over a long term, there have been plenty of moments where there's been intervention to strengthen the yen, and it continues to weaken after that, right? So it's a short-term plaster stuck over a big long-term problem. And certainly if you're looking at the possibility that we're going to see a more expansive fiscal policy, there's a strong possibility that we see further yen weakness as a result. Now, that has, of course, been something that people have been betting on, and we've been seeing dollar yen rising into this weekend election. This is a selection of headlines and snippets talking about some of Takaichi's recent comments. Much like what Donald Trump's been saying, she has been touting the benefits of a weaker yen. Of course, a weak yen means that Japanese producers can sell abroad at more advantageous prices. It makes Japanese exporters more competitive around the world. So good for Japanese businesses. However, bad in some ways, because when you see a weak yen, so the value of imports become more expensive. So it's fine as long as you're only buying everything domestically. But when you're buying things from abroad, then suddenly the cost of living starts to go up. And inflation certainly has been a problem. You can see this here. The rise of dollar yen, i.e. the devaluation of the Japanese yen, has been going hand in hand with higher inflation in Japan. And certainly you could say that wages to an extent have also kick-started. And this is part of what they've needed for some time in Japan, to see wage growth actually pick up. That has happened. But bearing in mind, you might see a headline saying wage growth goes up 3%, right? That's great. But for every person that it goes up 5%, someone goes up 1%, right? So it's not necessarily equalized across the board. So that person that's got a 1% rise or no pay rise at all suddenly has a squeeze on their cost of living. So it's really not something where everyone's experiencing the same thing. So that higher inflation undoubtedly will hit people. And a lot of people, even if they do see higher wages, in Japan, they're used to pretty much no inflation, right? So when you see elevated inflation and the cost of something that you've known to be a certain price goes up and up and up, that is a concern, even if you are getting a pay rise. So inflation has been a core problem over in Japan for many. And that's why some people are saying that they need to stem the decline of the Japanese yen. We saw intervention recently taking place. And we saw a sharp decline in terms of the Japanese yen. But like I said, it's come up since. Now, part of the movements we've been seeing in terms of the Japanese yen have been associated with what's happening in the bond market. Now, you can see here that the upside seen for bonds in the US, which are essentially the top two lines, we have been seeing significant gains for bond yields across the board. But most notably, after we saw the yield curve control measures in Japan aborted, we've seen yields in Japan essentially go from nothing, certainly on the 10-year here, up and up and up. It's a much steeper ascent that we have been seeing more recently. And this brings the question of the carry trade into play, right? So as you see yields rise, so this is essentially the risk-free rate of return. So you see the possibility that people that are invested abroad don't feel the need to, they'll invest locally. You also see borrowing costs rise significantly. So the carry trade has been borne out the idea that you can borrow for free in Japan and invest abroad. If you can't borrow for free in Japan, then you're not necessarily likely to invest abroad. If it's close to it, let's say you think I can borrow at 1% and I can get 5% in the US. Well, that still makes sense. It doesn't have to be 0%, but there has to be a significant differentiation between your borrowing rates and the rate of return that you can get abroad. Now, in the past, you've seen many in Japan borrowing for very cheap and then investing in, say, growth stocks, right? Big tech names. And they kept going up and up and up. And what we have been seeing over the course of the past week in particular is concerns once again around valuations in the tech space. That doesn't necessarily seem like the absolutely risk-free bet that it has done in years gone by. And so, some people are struggling for where to look. Like I said, you can just look for the bond markets. What's your return in the US? That's great. But as that gap narrows, so it draws money out from these global markets, the likes of the US, and back into Japan. That provides the potential basis for weakness when it comes to equity markets. Now, this is the differential between those rates. So as we saw here, we've got the 10-year and the 30-year, right? So here we've got the relationship between the two. And what you can see here is that we're seeing it narrow significantly. There's still a significant difference. But the closer they get together, so the closer we get to zero on this chart, the more problematic it could be for global equities in particular, the more that Japanese funds could flood back into Japan, the more problems we could see in terms of yields in the US, because of course the US has a debt problem as well. They have a huge amount of treasuries that they need to roll over this year. Given the fact that the Japanese are such significant buyers of US debt, if we suddenly saw Japanese debt at similar rates, you don't necessarily have that same amount of demand. So drawing money out of US equities, drawing money out of US bonds, and bringing it back into Japan. That's what is at stake for US markets in particular, and therefore global markets, if we continue to see bonds rising at such a fast clip. Now, why is this election so key for that? Well, when you see bond valuations, if you're looking at the short end of the curve, like the 2-year, the 2-year yield is heavily related to what's happening in terms of monetary policy. So are we going to see the Bank of Japan hike rates once again, right? So that's great. But when you're looking at the longer term, we're looking at the 10-year here and the 30-year. That has a lot more to do with the sustainability of the economy. How much do you believe in the long-term future of this economy? And certainly, given the huge amount of debt that the Japanese have, if we have a leader of the country that is going to embark on even more spending, if you imagine someone that has a credit card, they have a debt of £1,000, $1,000, may not be that much of a concern for you to lend them money. What rate of return would you want off of that person? If that person has $1 million debt against their head and they ask you for money, you're going to ask for significantly higher rate of return. What happens to that person when they take on that debt from you? Well, that debt is going to compound at a faster rate. So it becomes even more problematic for their debt levels. And so this is the problem. The Japanese have a very high rate of high debt as it is. The rise of yields that we have been seeing over recent years makes that problem even worse. And if we see Takaichi essentially take the majority in the lower house and suddenly feel emboldened to ramp up spending, if that means even more debt added to the pile, so you see yields likely rise once again and the carry trade come into question. Do we see US markets responding due to this? And you can see here that generally what we have seen is strength in terms of the likes of the Japanese markets, so the likes of the Nikkei 225, alongside the rise of dollar yen. So what does this mean? So a weak yen is good for Japanese businesses. Like I mentioned, essentially, you're seeing Japanese businesses selling abroad at advantageous rates. If you suddenly see a strengthening of the Japanese yen, Japanese cars become a lot more expensive, Japanese electronic goods become more expensive, and people abroad don't necessarily buy them to the same degree. Also, foreign goods start becoming more cheaper, essentially. Yeah, they're more affordable. That's the word I'm looking for. Foreign goods start to become more affordable for Japanese buyers as well. So again, they start to switch away from just Japanese products. So you can see why the Nikkei 225 benefits from the rise in dollar yen. And the flip side is true, right? Not the flip side, the same is true for what's happening in the US. So you can see here the S&P 500 going hand in hand. So why would it be bad news for the S&P 500 and US stocks if we were to see things roll over? Well, because of the carry trade, because the carry trade comes into question if we see a significant deterioration in terms of dollar yen. If we see yields rising further and we see the Japanese yen starting to strengthen in a meaningful manner, then things start to become a little bit dicey, not only in terms of Japanese stocks, but also in terms of global stocks. And that's the context behind which this election is taking place. Now, let's look at the charts and just see exactly how things are shaping up right now, just to close out this video. So first and foremost, here we are with dollar yen. Now, what we've seen here is what I would expect to be intervention, right? So whenever dollar yen gets towards certain levels, you do see some sort of intervention to try and essentially undermine that one-way trade. They're happy with dollar yen rising, but they don't want it to just rise and rise and rise. There needs to be some sort of stability. And often, if we look back at, say, the monthly time frame, often it's like 150s. So you can see here, this sort of area here, what we've seen over recent years is the 156 is protected. here we go. So we've got 158s up to 161s. We've got this kind of zone that often when we come into that territory, we have the possibility of breaking lower because of the risk of intervention. And so we're coming back towards that, but I would say, you know, I don't necessarily know if they're going to intervene immediately if we see a dramatic move straight away after the election. But certainly if we were to see a majority coming into play in Japan with this election, I think there's a good chance we see further upside for the likes of dollar yen. Certainly the dollar at the moment strengthening as well, so it sort of really plays into that narrative. In terms of near-term price action, you can see sort of starting to try and roll over a bit here at the moment, but you've got this sort of trend line support. You've also got horizontal swing lows worth noting around your 156.3, 156.6 kind of areas. So yeah, I think this is a really interesting market to be watching out for as we see this election taking hold over the course of the weekend. And then the Nikkei 225. Like I said, if we see dollar yen rolling over, then we're likely to see the Nikkei 225 rolling over as a result as well. So a key market to be watching out for this election. If we see the potential for a strengthening of the yen, are we going to see that drive valuations downwards as well elsewhere? You know, it's a really interesting story to be watching out for. I hope this has been useful for you guys. Make sure to like, subscribe, and follow for more as we look into a busy weekend at a time where, quite frankly, you don't know where to look. There's huge volatility left, right, and center. And with Donald Trump, you never know when something new is gonna happen as well. So yeah, a busy time, a difficult time for many traders to try and keep on top of things. But this is just one narrative that's likely to play out over the course of the weekend.